What is a factoring company, and why does any business need to work with a factoring company? Hi, my name is Kyle. I'm the Operations Manager for Interstate Transport Service and founder of iKyle Logistic Partners. In this video, I will explain what a factoring company is and why most trucking companies need to work with a factoring company. So, stay tuned. Let me start with a disclaimer. The information I'm about to share is a combination of my business experience with both short and long-term loans. I'm not a licensed attorney, and the information I'm sharing with you is based on my personal experience. Hopefully this information can help you understand the need for a factoring company. I personally work with 2 factoring companies in which I conduct and refer business to. With that out the way, what is a factoring company? Simply put, a factoring company is a legal loan shark. Now, I'm not trying to be negative, so let me explain. The average interest rate on a conventional small business loan is between 3 and 7%. That said, interest rates vary across lenders, with banks typically offering lower rates than alternative online lenders. Let's say you're an investor and you want to lend money to a small business. The first law you have to consider would be the usury law. Usury laws are state laws that specify the maximum legal interest rate in which loans can be made. In the United States, the primary legal power to regulate usury rests primarily with each state. The maximum interest rate allowed by any state is 8%, unless there are any exceptions allowed by the state, which then the detail has to be in the form of a written agreement. Let's say you're a business owner and you need $10,000 for your operation expenses. A lender comes along and says, hey, here you go, take this $10,000 and sign this promissory note at 24% annual interest. You're desperate to keep your doors open, so you take the money and sign the note. That right there is illegal. Even though you agreed, if you can't pay it back, the lender's chance of collecting the money is null and void, because 24% annual supersedes the 8% usury law. This scenario is like a loan shark trying to file a lawsuit against you to collect an outstanding debt. Simply put, it will be thrown out of court for usury. Once you understand this scenario, let's find out why any valid business such as a trucking company would team up with a factoring company. It starts with the need to keep a stable cash flow and to keep your business running. Here's the scenario. Let's say you have 10 tractor trailers on the road, ran by 10 drivers. You have a payroll to meet every Friday. The trucks generate $10,000 each week. The driver earns 25% of the line haul. How much money do you need for that week's payroll? The answer, $25,000. Now let's talk about the fuel bill for the diesel to power the tractor trailers. Let's assume that equates to 20% of the load. That fixed expense will cost you $20,000 for that first week. Now here's the $1 million question. When will your company have the $100,000 it generated for the first week in the bank? Again, I'm going to ask, when will your company have the $100,000 it generated the first week? When will it have that money in the bank? Well, in order to answer that question, you have to understand how brokers pay their bills. Most of them pay on what's called an open account. B2B, meaning business to business, mostly operate their accounts payables on a 30-day basis. Pretty much the same way credit card companies operate. You know how you use your card, you make you charge a card, you charge a payment, and you have 30 days to make that payment. Now the only difference is a business has to pay the total bill within 30 days. So looking at the scenario, you generated $100,000 in sales, accumulated $25,000 in payroll, and burned up $20,000 in diesel in just 1 week. And now you typically have to wait 30 days to get paid $100,000 in business that you generated for just that 1 week. So let's add up the weekly fixed expenses. That will be $45,000. This means you would need $180,000 in the bank in order to bankroll a 1 month of your trucking operation before you see the first $100,000 coming back, assuming that every broker paid you on time in 30 days. If you understand this simple scenario, you should understand that would pose a catastrophic event in your business. Mathematically, you would be out of business by day 10 because you have no immediate access to cash to pay your weekly fixed expenses. Understand, to keep this illustration simple, we are only using 2 fixed expenses. Trucking operations require a multitude of fixed expenses such as rent, insurance, software subscriptions, equipment, leases, advertising, and yada 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 yada. The only option here would be leverage your accounts receivables with some type of loan to stabilize your operational cash flow. This is where a factoring company comes into play. A factoring company will purchase your receivables every week, in some cases every day if you choose. The costs range between 2.99 and 7%. This means that my factoring company that charges me, let's say 3%, will advance me $97,000 every week, assuming I generate $100,000 per week with the 10 trucks. Look at it in another way. I generated $400,000 in sales for the month. I used a factoring company to stabilize my cash flow, and it cost me $12,000 to bridge the gap by using a factoring service. Now, here's some questions. Was it worth it? Well, you're damn right. Here's the hidden factor. Usury law says you can't charge over 8%. The factoring company earned 3%. Now, you got to look a little closer. I'll say it again. That 3% was earned in 1 week. Every time I submit my receivables, the factoring company is going to get the same 3%. This means over a period of a year, the factoring company will have made approximately $144,000 on the $4.8 million I generated. This is the reason I call it legal loan sharking. Every 30 days, the broker pays the factoring company. Every week, we get a loan against our receivables. Now, this tool is necessary to stay in business while scaling your business. I hope this video was clear for those who didn't know, and I hope this message painted a clearer picture for those that were a little familiar with the term factoring. And like always, if you'd like to learn something in the video, please like or share. And if you'd like to see any future videos, please hit the subscribe button. Thank you, and remember, keep your eyes open and stay safe.